What's going on, guys? So we need to talk what the beep is going on in the market. So obviously I made a emergency video last weekend that we just had because I wanted to warn you guys that the momentum has officially switched to negative on the weekly time frames, which is the number one trend following metrics you want to keep an eye on for the short to medium term. And today everything is red basically in the market. This video is not even about that. It's basically going to be about Tesla. What the beep is going on with Tesla? This is nuts. So basically Tesla stock is exploding. We just received some new information. I knew that there was something going on behind the scene because it's not normal when you see a stock break the first standard deviation to then go straight to the second standard deviation and then break it to then go to the third standard deviation with zero bounce. Obviously that is not normal in the market, especially for a company like Tesla and everything that's going on with them on the fundamental side, which none of it has changed. Everything I keep talking about on this channel is still intact. Honestly, Tesla is going to change the world overnight with Optimus and full self-driving. And on top of that, they just announced that they are starting the production of Optimus actually in the next coming weeks in their Fremont factory in California, which was surprising to most people, even people that or deemed expert on the Tesla stock. And also we had the news that the robo-taxi would actually be launched this summer in Austin, Texas, right? So everything is going really well fundamentally, but the stock is literally just exploding to the downside. We had an explosion to the upside and now we're just basically just crashing. And the reason why is Elon Musk is saying some crazy shit on the internet. Honestly, I'm not happy with that. Obviously, this is a long-term investment. As I said, 4 to 5 year investment when you understand the valuation that Optimus will give to Tesla and the impact it will have on the world. But honestly, guys, on the short to medium term, what the beep? And now we officially know why. So basically, Elon Musk wants to buy OpenAI. So he just did a crazy bid of, I think, $98 billion or something like that with a private group. This is getting nuts. The stock was already tanking because of Dodge, right? And to be clear, to be fair to Elon, I agree with everything he's doing. I don't disagree. The problem with Dodge is you're a CEO of like 7 different freaking companies that are literally changing the world right now. You have Starlinks, you have Neuralink, you have FSD, Optimus with Tesla, you have SpaceX, you have all these things, and now you're a public servant for the US government. This is crazy. This makes no sense. One man cannot do it all. That's just the truth, regardless if you have an extremely high IQ. This applies to everyone. It's called the law of diminishing returns. The market did not like that. And the reason why is Elon Musk was never supposed to be the head of Dodge. He was supposed to be an advisor, which the market was okay with. The market did not care about that. Wall Street did not care about him being an advisor to the Trump administration. They actually saw it as a positive thing. But now it's the opposite because there was another dude, he went away. I don't know what the hell is that guy's deal. Vivek something. He basically just tries to get new jobs every couple of months, it seems like, without actually completing an actual job. That seems to be his stick. And now Elon is the head of Dodge, right? So that's crazy. That should not be the case. You're the CEO of multiple billions of dollars company. You shouldn't be a public servant in the same time. Common sense. Even though I agree with what he's doing, I think it's amazing what he's doing and the fact that he has the balls to, point out all the corruption on the federal level and the government. I wish we had that in Canada, but that's not the point. The point is you're supposed to be an advisor. So that was, already just bring the stock down. And now we just had another piece of news even worse, which is he wants to buy OpenAI because he has this beef with this other dude, Sam something, Altman or whatever, which I agree, he's a very bizarre individual. He keeps lying, which is very weird. He lies on Congress. There's video of him just lying, straight up lying about stock compensation and stuff like that. He also kind of stole the company from Elon, which is very bizarre the way he has done it. So I don't disagree with the way Elon feels or whatever, but that's not the point of the video. The point of the video is that last time Elon did that was with Twitter. And I just want to show you the chart. If I'm not mistaken, this is what happened to the Tesla stock when he purchased Twitter because he was forced to liquidate his Tesla shares. Afterwards, eventually, we had a big rebound. So obviously, we're gonna have a big rebound after this. But obviously, this is horrible. This is not good. So I apologize if some of you guys entered long term. The thesis is intact, but it's just the way that Elon has been comporting himself publicly on social media, is very problematic. When you're the CEO of a $1 billion company, you're not supposed to be acting that way. So obviously right now this is terrible. The other reason as well that you need to understand is when you look at this type of price action right here, where we just keep falling, it tends to have to do with margin as well. And you need to understand that a lot of people doing my strategies with options, which is basically just selling cash secured puts and covered calls, which is called the wheel strategy. You can look it up on the internet. It's a very profitable trading strategy that outperforms the market based on actual data. But the problem is a lot of people do it using margin. So they sell a cash secured put using cash collateral that they don't actually have in their account. It's margin. So example, it's like $100,000 of margin on their brokerage account, but they don't actually have the $100,000. And it works very well, and it's basically free money until the stock explodes like this, and then basically margin call because you don't actually have the money. So if you were me and basically I told you guys I sold a strike price at 370, right? Because I rolled after earnings in 370, which ended up being a terrible idea. I should have just left it like that and moved on. But anyways, I wanted to just kind of take this as a learning lesson and to share this terrible trade of mine, which is, it's very rare at this point that I do bad trades. In the same time, I followed my system. I followed the probabilities, right? I did sell at a strike at a second standard deviation, which is the orange line right here of the price action. So usually 95% of the time it's a bottom, and it's a great place to get exercised at a specific price, because then we have a reversal to the means, which is pretty high, which I'm going to talk to you guys about afterwards, which is the bright side of this terrible price action we're seeing. There's a bright side on the other side. It's just going to take a little bit of time. But going back to my trades right here with cash secured puts, and you're going to understand where I'm going with this, is a lot of people, they do what I did, but the thing is that they don't actually have the cash. If they do get exercised like me, I don't use margin, right? So then when that happens and then the stock just keeps plummeting and you don't have that cash, well, guess what? Your broker calls you and he's like, hey buddy, you need to get out of this. And sometimes now they don't even call you anymore. They just force to close your position for you to take a loss, and that's what basically cascades these types of big event to the downside. It's very rare to see a stock break all these standard deviation level for no reason. Obviously now we know that there is a bigger reason that just got disclosed to us in the last hours on Twitter, on X. It was kind of breaking news from Elon Musk. So hopefully that helps kind of explain to you guys why sometimes you'll see these type of just huge market sell-off, which are not normal. You don't see those. Usually when you have sell-offs, they're controlled sell-off. When you see that has to do with margin and leverage, and probably some institutions also getting caught, and stop loss also being triggered with billions of dollars. There was also a lot of leverage on the retail side, right? Because for me, when I'm buying spot, I'm buying just straight equity. But there's a lot of people with a shit ton of leverage. Like we're talking like crazy amount of money worth of call options to the upside with crazy strike price. I do think it's a great buying opportunity. Like, based on probability, we're at the third standard deviation. Literally, this is super rare. I haven't seen this in a very long time when it comes to Tesla. The fact that it just dropped like a rock to the third standard deviation. Obviously, I'm underwater on my cash secured put options. It's okay because I know that we're at the second and third standard deviation. I did roll it to a little bit lower for a little bit more premium through time because it was expiring the 14th February. So I rolled it to the end of this month. I'm not sure, honestly, if at the end of this month we'll have recovered, honestly. But one thing I can tell you is the probabilities. And as you guys can see right here, my indicator calculates how much percentage to the upside or downside based on deviations. And the means, which is the pink line right here, is at 35.9% from where we are right now, which is insane. It shows you how big the range is. I'm not expecting us obviously to go back to those levels one shot. The first target for us to go back up is definitely going to be a bounce to that second standard deviation, which is 10.74% higher than where we are. So I am expecting us to have a nice bounce here. This is why I don't really mind where we are based on probabilities, and I have the cash, so I'm not panicking, right? A lot of people, they're using margin, right? So that's why you're seeing this huge sell-off and just basically complete liquidation all across. So yeah, that's pretty much what I'm seeing. So hopefully this helps you guys kind of understand the risk and the pros, and kind of how being an option seller works. 99% of the time I never get exercised. This is one of those times when that looks like I'm about to be exercised, which is okay. I don't mind. I do believe in Tesla stock, and the fundamentals are still amazing. It just keeps getting better. The one issue though is obviously the acquisition of OpenAI. That is something that I was not expecting out of nowhere. Hopefully it fails. Honestly, I just hope it fails. So if that does happen and it gets rejected, example as an offer or in court or whatever the hell they're trying to do, if it does get rejected, then Tesla stock is gonna rip. It's gonna have a huge bounce to the upside. So yeah, I just wanted to kind of make an update that you guys know what the beep is going on. Not good. Was not expecting that. Based on probability, we should be bottoming, especially now we're below 330. Literally, we're below this contraction pattern here before we went crazy. This is pretty nuts. But on the bright side, we're now pretty close to a bottom. So for us to go lower, it would have to do with liquidation and Elon Musk basically selling a crap ton of Tesla stock at those lower level, which he could do. I have no idea. That short to medium term noise. I do believe it's a gift. Long term, it's going to be a gift as a dip buying opportunity. I personally think that Tesla is a $1,000 to $2,000 stock USD if you're patient enough, as a long term investment, because of Optimus, not necessarily because of full self-driving. So I just wanted to make a quick update. I got hurt. Everyone got hurt basically. This sucks. Even though I bought the bottom, if you guys remember my video, I made a video literally at the bottom telling you guys to buy right here. I was kind of just dollar cost averaging all the way here. I mean, this is a huge drop, guys, and I lost a lot of unrealized gains, a lot. So bigger picture, long term, nothing really changed, but definitely not fun to witness. So hopefully you guys hang in there. So that's why you never use margin. So now the question is, how long is it gonna take for the Tesla stock to recover? That's the question. Based on probability, it's a great entry. The means, it's 35% higher from where we are. So that's a 35% upside literally, and only a 1% chance that we go lower based on probability, because we're at the third standard deviation. But then, the problem with Elon and the way he's acting right now, and then the purchase of OpenAI, that increases that 1% chance, even though we're already at a third standard deviation, if that makes sense. So just want to make this quick video for you guys. So we're gonna have to see where this goes. Honestly, it's going to be tough. Based on probabilities, that's how I trade. Very soon we should bounce, have a big bounce. It's a great buying opportunity at the moment Elon Musk stops the nonsense he's doing right now and all the noise he's creating on social media. After that, it's going to be probably seen as a great buying opportunity. All right, so that's it, guys. Take care. Stay blessed. Have a good one.